It's 5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Future is higher right now. The Nasdaq 100, though, set for the worst week since April. Bitcoin bouncing back to a certain extent. This as a busy week of big tech earnings shows massive spending plans for AI. The latest from Amazon vowing $200 billion of spending this year. And indirect talks between the US and Iran. Omani officials say separate talks have been had with delegations from Washington and Tehran in the last few hours. So let's take a look at this market today. Futures firmly pointed higher after a miserable session yesterday. We were down 1.4% on the Nasdaq 100 as that tech sell-off just continued. CapEx spending plans, of course, playing into it. Lack of confidence in software companies that have been doing some of this for eons, right? Will they be able to continue offering the services that their clients require, or will AI just take it over? And then, of course, you had that miserable challenger job cut situation where we saw the most layoffs since the great financial crisis playing into the mood. That said, we do seem to be a little more risk on today with futures pointed higher, particularly for Russell 2000 futures. Perhaps that rotation just continues. Let's take a look at bonds because we are seeing the curve lower across the board, but the steepness hasn't changed. So we're all the way down to 347 on the 2-year. We're still at 485 on the 30-year, although we're about 5-6 basis points lower than we were 24 hours ago. That 2-10 spread at about 71 basis points now, the widest in about 4 years. And let's take a look at some of those particular outliers. So we have silver, for example. It was down 20% overnight in Asia, but we're bouncing back today for silver. Bitcoin as well. It got down as far as almost $60,000 a coin. We're almost back at $65,000. And then we're keeping an eye on oil as well as we hear those talks now were indirect, with Oman appearing to be mediating as opposed to direct talks between Iran and the United States. All right, let's get to some individual stocks to watch. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Amazon is firmly in the red this morning after much higher than expected forecast for CapEx. So this, of course, echoes what we had from Alphabet yesterday and really goes to show how concerned investors are getting about how much those bigger tech companies are spending on AI and whether or not that will actually start paying off. And we are down almost 8% for Amazon this morning. Moving on to Stellantis, and there for the car maker, shares are also in the red after saying it expects to take charges of about 22 billion euros. This is part of a business reset to move away from electric vehicles, and the charges came in higher than analysts had expected, and this now really puts pressure on the CEO to show that the big restructuring that is ongoing is actually starting to work. And finally, Doximity, the healthcare software company, is also in the red this morning, down almost 32%. It provided an outlook that was seen as disappointing. And this is also part of this broader sell-off in software stocks that we've been talking about all week as investors try and limit their exposure to companies that they think will be really disrupted by AI.
That is some drop for Doximity. Chloe, thank you so much. Chloe Melly there. And coming up this hour, we're going to catch up with Citi's Veronica on the labour market. We're not getting the NFP today, though. We'll have to wait until next Wednesday for that. A delayed jobs report will be in focus. Let's get back to these crazy markets. Nasdaq futures back in the green after US stocks posted their worst week so far in months, while the yield curve flattens very slightly off its steepest in 4 years. Let's bring in Bloomberg's Morwenna Conium to join us now. So Morwenna, this sell-off that we've seen all week, it just was like a vicious cycle. Once we saw some selling, we saw even more selling. Was it mainly the retail trade that was getting out? And should we expect some kind of risk-on move again now that we're seeing futures positive?
Well, we really are seeing a rebound in futures this morning, and also in Bitcoin and some of those commodities as well. So the tide does really seem to have turned. Whether that can be sustained, there's some dip buying going on, a sense that perhaps the pile in to sell went too far. Maybe there's still some value there. And a lot of this really speaks to the paradox around the AI trade at the moment. We've seen the sell-off in some of those software developers this week because of concerns about AI disruption. That's sort of taken a chunk out of the AI trade in general. There's also concerns about companies spending too much. We've just seen Amazon's announcement this morning, which is weighing on its shares in the pre-market. But at the same time, dip buyers are feeling, well, maybe this is actually a bit of an overreaction. There is still a lot of growth potential there. And so we're seeing that sort of starting to flip back again. And then that also feeds into the sort of risk appetite as well. It's interesting, we're seeing the commodities splitting there. We're seeing precious metals pick up a bit after their slump, whereas copper futures are still pointing lower. That benefits a lot from the AI trade too. So I think really this sort of sense of whether things have gone too far or not far enough is really what the tension is there this morning.
Yeah, I mean, Mormona, why are the enormous capex plans sending markets into a tailspin? Typically, spending in an economy should be good for the economy, right? It's creating innovation, it should be creating jobs, better productivity potentially.
Well, I think it's really a case of, capex is good if it actually provides growth and if it also matches the profit potential. I think there's some concern that perhaps companies are spending more than the revenue would merit, and that does lend them up to margin pressure, and it also. To the other side of the industry, this AI growth is also bad for some other stocks. There is that disruption, particularly with those innovations we've seen coming out of Anthropic this week. So I think that there's just concern, and perhaps that these valuations have got overinflated as well. The amount that people are spending, does it really match the potential that's there? So it's really a case of a reassessment as to what's merited and what is hype.
Yeah, it's really messy out there at the moment. At some point, I guess, clarity will prevail. This crisis of confidence in Bitcoin, though, does it preclude it now from ever being a good hedge again, or, a store of value or a haven?
Well, I think certainly that narrative has been disrupted. We've had reports out about the losses, actually, that those investments have sustained over the last year. We have had really quite substantial slumps, the most since back in 2022, where this trade sort of unwound. So I don't think it's ever going to be seen necessarily as that sort of pure opportunity again, but it is a very valuable, part of the market. It does attract a lot of interest, particularly when risk appetite is up. There was that political sort of charge that we saw when the Trump administration came in, and perhaps that's being lost now. So it's difficult to say, obviously, where it will be seen from here, but certainly there has been a lot of volatility, and it is trading very much as a risk sort of asset market.
Morwenna, thank you so much for joining us this morning. That is Morwenna Coniam. A closer look now at tech and Amazon's big spending plan for AI. Have a listen.
When I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI, but the lion's share of that demand is still yet to come in the middle of that barbell, and that will come over time.
Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So this $200 billion, it feels like everybody's been trying to one-up each other by, $10 or $20 billion, right, Tom? Is this a necessary spend for Amazon?
Yeah, it certainly feels like that, doesn't it? I mean, if we go back to, for example, the conversation that Microsoft was saying in terms of their plans for, $105 billion of spend, and then it was Meta with $135 billion, then Alphabet with $185 billion, and then Amazon says, I'll raise you and do $200 billion US dollars in terms of capex. So yes, we had another moment, of course, when investors started to fret about the extent and the historical nature of this spend on data centers and infrastructure that's planned now by Amazon. Of course, their spending over 2025 came in well above the estimates as well. So this is a huge commitment from Amazon. I think if you were looking for green shoots or at least some solace, then you could look at AWS, which is a key driver of profits for the company. They saw a 24% jump. That's the highest jump in growth that we've seen in about 3 years for that key part of the cloud business for Amazon. The e-commerce business came through with a beat. Advertising came through with a beat as well. And they have a backlog. And talking of Andy Jassy's comments there, they have a backlog in terms of demand for the data center part and the AI piece of about $250 billion US dollars. But to the point he was saying, this is about a time frame. They're not quite clear when that time frame comes. They know the demand is there. And that is where the anxiety lies for investors. When does it all line up in terms of the spend on capex that kind of aligns with that revenue stream? Andy Jassy says they do have the demand. How it comes through is going to be key.
So this escalating build out and the huge amounts of money that you just mentioned for all of those mega techs that you just mentioned, are they all competing for the same business in the end, or could they all thrive post spending?
I think that's a good question. I mean, it's going to be become differentiated. You're seeing the large language models are starting to differentiate. There's OpenAI, which is focused on the consumer. There's an Anthropic that's been very successful in terms of the enterprise piece. And then Gemini of Alphabet, of course, which is catching up very much in the consumer space as well, with also the enterprise offering. In terms of what's happening in the overall CapEx spend, $650 billion now, if you combine those four big tech companies in terms of their commitments for 2026. And in historical terms, again, we have not seen anything like that this century. You can put all the automakers in the US together, you can put all the oil companies together, you can put the Walmarts together in terms of their spend and their plans for CapEx in 2026. It's just a third, just 1/3 of that commitment just from four tech companies. We haven't seen this arguably since the 1990s and the telecoms boom and then ultimate bust as well, at least partly, or even you could go all the way back to the railroad road build out in the US as well. So it's historic what is being committed by these companies, and now they have to prove they are going to be able to monetize that. And this coming at a time when Anthropic, for example, is coming through with new products and moving into other verticals because they are also under pressure to show that they can monetize as they lead up to what is expected to be an IPO later this year.
It's all very exciting and terrifying as well, potentially. Tom, thank you so much. Bloomberg's Tom McKenzie. Now to other top stories trending on the terminal this morning. A Brevin Howard fund manager has quietly become one of the world's most successful macro hedge fund managers. Singapore-based Minal Bathwal has had an 18-year winning streak, not having a single down year since he started managing money during the 2008 financial crisis. His fund has scored wins on everything from Korean interest rates to Asian currencies. Societe Generale shares declining after it reported fourth quarter results for its trading units that missed estimates. Revenue from buying and selling fixed income securities and currencies fell 13%, while equities trading fell 5.3%. And European Union regulators have launched an antitrust investigation into the ski equipment industry, casting a shadow over the 2026 Milano Cortina Games. The investigation is examining whether companies may have violated rules around cartels, specifically illicit price-fixing practices, which could have led to increased resale prices within the EU market. Coming up, Oman says it held indirect talks with the US and Iran. More on what that all means next. This is Bloomberg.
The president has obviously been quite clear in his demands of the Iranian regime. Zero nuclear capability is something he's been very explicit about, and he wants to see if a deal can be struck. And while these negotiations are taking place, I would remind the Iranian regime that the president has many options at his disposal, aside from diplomacy, as the commander-in-chief of the most powerful military.
Oman says it has had indirect talks with Iran and with the United States. Discussions focused on conditions to resume negotiations. Joining us now from Washington is Bloomberg's Kasia Klimashinska. Kasia, is this a little bit less than we were expecting? Did we know the talks were going to be indirect?
Hello. First of all, I think it's good news that the talks happened. As you said, we have this kind of a readout from Oman saying that Oman talked to both sides. No, we didn't know. We didn't expect that those would be indirect negotiations, but it sounds like that's what's needed. Oman said that it kind of tried to establish rules, lay the groundworks for the two sides to talk. And the Associated Press also reported that the U.S. delegation has most likely already left the place where the negotiations were happening in Oman. But it could be good news for the oil market. Of course, the oil market is watching it with concerns. But as long as those talks are happening, that perhaps diminishes this threat of some sort of military action from the U.S. that Caroline Levitt just mentioned at this White House briefing that you showed us.
Yeah, and if anything, you know, when President Trump suggested that there would be direct talks, it did seem surprising. So maybe this is a first step towards direct talks. Let's talk about President Trump calling for an arms treaty with Russia. What's going on there? Why did this come up now?
So this is, again, a difficult relationship between the two sides that don't necessarily talk too often, U.S. and Russia. But there is this nuclear arms treaty called the New START that expired. It expired on Thursday, and President Trump came out on through social media saying that he wants a new agreement. It's a common strategy for Trump. He wants to throw away what's already out there and just build something new, something that will have his fingerprints all over it. He also wants China to join those nuclear arms negotiations, and China doesn't want that. So for now, Moscow said that its understanding is that there is no nuclear arms treaty binding it at the moment.
What is happening in Minnesota and with ICE and DHS more generally, Kasia? We know that 700 agents were pulled out of Minnesota. What's next?
It's a very delicate situation after, unfortunately, 2 Americans were shot by the anti-immigration officers sent by the federal government. So President Trump is very careful there. He announced the withdrawal of 700 officers in Minnesota. But at the same time, he reiterated that it's still his mission to get rid of illegal immigrants in this country. And so he will continue perhaps looking at some other cities that he didn't specify.
All right, Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska for us in Washington. Let's take a look at where markets stand now, because if we look at Bitcoin, we got down to literally 60,000 and change overnight. We're back up to nearly 66,000. Dip buyers coming in, maybe that crisis of confidence or that forced selling maybe abating. We'll see. Now, gold has been volatile, but the last couple of days it's been around this level, about $4,900 an ounce. Silver, though, a lot more volatile. That was down 20% once again overnight. It's recovering today, too. And if you take a look at iron ore in Singapore, below $100. So there's just one direction of travel for iron ore, and it would seem for copper as well. Coming up, Stellantis shares plunging today on electric vehicle reset charges. More on that story next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of Stellantis plunging this morning, the steepest drop on record, in fact. This after the carmaker said a business reset resulted in charges of around $26 billion for the second half of 2025. Bloomberg's Craig Trudell joins now with more. The CEO said the company basically overestimated the pace of the energy transition. Craig, is this reset that we're seeing not just at Stellantis but across all EV makers thanks to the Trump administration and current policies, or is it a broader lack of appetite now for EVs?
Yeah, I think it's a little bit of all the above. I also think you have to pin quite a bit of blame here on management teams, right? Where, at Stellantis under, the new CEO who's been in place for a good while now, but also his predecessor, Carlos Tavares, it has been difficult for them, right? They've had to answer to 2 very different administrations in the U.S. who had diametrically opposed views on the future of the auto industry. That's really difficult to run a business around. But, this is also a story of a company that was trying to become competitive in electric vehicles, investing a lot in that and getting their suppliers on board to, feed those batteries and put those EVs on the market. Now that you throw those out in response to the changes in policy, it's going to cost you a heck of a lot of money, and that's what we're seeing this morning, and also have seen at GM and Ford.
Yeah, exactly. And also what surprised me is that China is also seeing a cooling in demand for EVs. We saw, trouble with BYD, this after, a price war between the EV makers in China. So I'm wondering just, what is that broader sort of shift away from electric vehicles? Has it something to do with the difficulty of using them, charging facilities, batteries versus charging, etc., as well as everything else?
Yeah, I think we have to maybe separate China from the rest of the world to some degree, because absolutely we're seeing a slowdown there, but it's a slowdown from a really impressive high level in terms of sales. And it's a very different story in the U.S. And even, I think, Europe is somewhere in the middle. And interestingly, Stellantis has had, this approach of trying to leverage a relationship with a Chinese manufacturer called Leap Motor, that arguably is making their life difficult at some of Stellantis's brands, where if you have this new entrant with a lower cost base out of China and an ability to price very competitively, that puts a high volume manufacturer like Stellantis in this very difficult position over here in Europe. So where we've seen, some pickup in demand, but still a bit of a disappointment in terms of, the growth not being what policymakers hoped, when they were setting these targets to phase out the combustion engine, around 2035. Yeah,
that's for sure. Craig, thank you so much for the update. That is Craig Trudell there in London. Time now for your front page news. First up, the Wall Street Journal says Toyota Motors CEO is stepping down after just a short term in office. Toyota has been navigating Trump-era tariffs too and struggling to maintain market share in China. The company pointed to profitability issues in announcing the elevation of the CFO to the role effective April 1st. Next up, the New York Times leading with Trump RX. The Times reporting the site is aimed at helping patients use their own money to buy medicines, but researchers warning, however, many could pay too much if they use the site. The government website will not sell medications, but will provide an entry point for consumers to buy 43 medications, including things like insulin and GLP-1s elsewhere. And finally, the Financial Times reporting President Trump's policies are denting international travel to the US. The FT says the number of foreign visitors fell 4.2% in 2025. That's the first annual decline since COVID. This all as the president oversaw an expansion of immigration enforcement, mounting scrutiny at the border, and a suspension on visa issuance to 75 countries. Coming up, Citi's Veronica Clark expecting a catch-up in job growth in January, though we won't get the data until next week. More next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures higher now after U.S. stocks posted their biggest sell-off in months. This as a busy week of tech earnings showed massive spending plans for AI. The latest from Amazon vowing $200 billion worth of capex this year. And indirect talks happened between the US and Iran. Omani officials saying separate talks have been held with delegations from Washington and Tehran in the last few hours. So let's look at those markets. We're off our highs, but futures very definitely pointed higher. This after, of course, the Nasdaq 100 dropped 1.4% yesterday. It was a real miserable day. The Challenger layoffs report added to some angst around software companies and AI, and we had metals just bouncing around all over the place. Looks like that might come to an end today, particularly for the Russell 2000, which continues to be the beneficiary of whatever this rotation is. On the bond side of things, the curve has dropped across the board, but it's still at its steepest level in about 4 years. That 2-year yield at 3.47, the 10-year yield at 4.19. That's about a 72 basis point 2-10 spread right there. And let's take a look at some metals, because we saw silver drop 20% overnight. It's recovering again, but we're down to 73. It's like 2 steps backward, 1 step forward every morning that we come in. Bitcoin the same. We were down to $60,000 and change. We're back up to nearly 66 now. And crude oil, watching Iran, we came off a little bit, but we're putting on about 48 cents there now to almost $64 a barrel. Let's get to some individual movers now on this Friday session. Here's Chloe Melee in London.
Good morning, Bonnie. It seems the market isn't too thrilled about how much Amazon is planning to spend this year. So the forecast for capex came in way ahead of expectations. And just like Alphabet yesterday, we are seeing that result in quite a lot of weakness in the shares and really fueling investor concern around just how much those big tech companies are spending on AI and when we might see actually start to pay off. Moving on to Stellantis, which is also plunging this morning after announcing that it will take charges of about 22 billion euros related to a business reset to shift away from electric vehicles. And this is not the only car maker that we have seen move away from EVs, but the charges were way higher than expected from analysts. And so we are seeing quite a lot of weakness in the shares this morning. And this is really going to put pressure on the company to show when those benefits from that restructuring will actually come through. And finally, Reddit announced a $1 billion buyback and also projected very strong sales for the first quarter. And this shows how much the company is making headway in the advertising business in particular. And so this is quite a positive move for the company, up more than 9% in pre-market trading for Reddit.
Chloe, thank you so much. That is Chloe Melee there in London. The private challenger job cuts data yesterday showed the worst layoffs since the great financial crisis, casting gloom over markets. Now, Bloomberg Economics says the layoffs announced so far have been concentrated in a handful of sectors and haven't broadened enough to suggest a shift to a high firing, low hiring regime. No non-farm payrolls data today, of course, we get next Wednesday. But Veronica Clark of Citi was expecting a catch-up in job growth in January. Still, though, she sees risks for the unemployment rate tilted to the upside. And I'm pleased to say Veronica Clark joins us now. So, Veronica, we get that data next Wednesday. It's going to be a huge week, as you pointed out.
Yeah.
What is it going to mean to us next Wednesday? What will it tell us about the current state of the labour market?
Yeah, we are expecting seemingly stronger job growth in January. We're at 135,000. Obviously, would have gotten that this morning. Another jobs Friday that wasn't. But I would take that number with a lot of caution. There has been a very clear pattern of residual seasonality around December, January, start of the new year. The last couple years, and we've seen this January number stronger before. If you look at claims, initial and continuing jobless claims the last few weeks, they've gotten very low. They tend to get very low around the holiday season, start of the new year. That's been a good signal for this stronger January job growth. So I think we will see that in January, but I would really caution not to interpret that as a sign that labor demand is really rebounding, because there are a lot of signs of the weakening labor market still.
Yeah, what did you make of the challenger layoffs yesterday? Did it give you pause even for that amount of enthusiasm for January?
Not necessarily for January specifically. If anything, we do see these challenger announcements tend to lead actual layoffs. When they happen, they're announced, and then they happen later. We tend to see that lead by maybe about 4 or 5 months or so. It is just a scraping essentially of all the announcements on job cuts. So you do have to take it with a grain of salt. It's not exactly hard data. To believe that layoffs are picking up, you do want to see something like initial jobless claims starting to rise, maybe layoffs in the JOLTS data starting to rise more, obviously, than maybe we'd see that in the slowing payroll job growth. And we don't really quite see those signs in the hard data yet that layoffs are picking up.
Yeah, okay, well, that might be something we have to look forward to in 3 or 4 months' time.
Right.
But does it give the Federal Reserve any ammunition for potentially thinking about another cut sooner? Yeah,
I mean, it probably doesn't right now, but it should in a way. It's been a bit surprising, I think, to hear Chair Powell and some other Fed officials talk about, being encouraged by some recent stability in the labor market. And yeah, we did have the decline in the unemployment rate in December. That will be encouraging, but that was 1 month that followed essentially 5 months where the unemployment rate was rising. And there are, as Governor Waller points out, job growth is essentially flat on the year. There are signs that this is not a healthy labor market.
Yeah, it really isn't, apparently. What about wage growth? Can that be any kind of a silver lining?
Yeah, I mean, we have seen wage growth holding up enough. We're kind of running at a normal pre-pandemic rate. But, if you're looking for signs of how labor demand is evolving versus labor supply, of course, we have had immigration changes this year. Wage growth is a good tell about, how loose or tight the labor market is. And we have seen some better measures of wage growth slowing more recently. The Atlanta Fed wage tracker, that has slowed a lot through the end of 2025. Next week, with all the data, we'll also get the employment cost index for Q4. That's the Fed's gold standard for wage growth. That is slowing. It's not particularly weak or anything, but it's certainly telling us that the labor market is not a source of inflationary pressure.
Well, we know that the Fed had been very worried about the labor market in the run-up to the holidays, let's say, and then it sort of took a back seat with everything that was going on, and it didn't seem like there was that much that was alarming out of any labour data that we were getting. But the Fed doesn't want to be behind the curve, so everybody who's waiting for the first rate cut in the second half of the year, should that not be brought forward?
Yeah, it should, in a way. I mean, we've kind of gotten to the high point of where the Fed is comfortable with the unemployment rate going. We know in their last forecast update in December, they were expecting to see something like 4.5% by the end of 2025. We got there. I think anything beyond that, you are getting more uncomfortable that this is just an unemployment rate that continues to gradually increase, and if that trend persists, at some point the level of the unemployment rate is not so low anymore.
Will the market look through what you deem to be the seasonal effects in January that we might see next week and start pricing in a third cut potentially this year?
Yeah, maybe not in that January data. It probably does take some time. Again, I think that January number will look strong because of this seasonality, but because there is this seasonality in the jobs data and the inflation data. There's also a seasonality in Fed pricing the last few years and how people are perceiving the risk of Fed cuts, where it's the start of the year, we kind of price that out. And then as we get the weaker data in the spring and summer, we start to add those cuts back in. So maybe it takes another couple months to really get, the market to price more cuts.
Does Kevin Warsh at the helm change any of this calculus?
I don't think in a dramatic way. We are expecting that he'll come in and advocate for more rate cuts. The timing of it is such that he would be joining potentially. We don't quite know how the Senate nomination process will play out, but should be joining maybe by something like the June-July meeting. That's the time of year when we have seen weaker labor market data start to show up anyway.
And it's midterm prep time.
Yeah. And so if we do see that seasonality in the jobs data, we get some weaker data, it would probably be easier to convince some of these hawks that, maybe we should be cutting a bit more. But it starts with the data. I don't think it starts with whoever the chair is.
With Kevin Warsh, yeah. Just curious about these layoffs that Challenger is telling us about, that I guess we would know about if we read every single headline, right? Are they thanks to AI?
So Challenger does do a breakdown of job cuts by reason. AI is one of the reasons that they try to pick out. There has been an increase in that as a cited reason the last couple months, last year or so. A bigger reason is still economic conditions, though. So it's certainly not all AI. If you look at something like the JOLTS data, the pullback in hiring, we have seen that very concentrated. It's broad-based, but it's been particularly pronounced in sectors like professional and business services. Maybe those are AI jobs that AI would maybe be replacing. But the pullback in hiring there also started early 2022. So probably some of this is AI, but I don't think it's all AI.
Right, and if the market really believed most of it was AI, we would not be seeing the gains that we're seeing in the Russell, right? Because some of those companies could be very much affected by AI.
Right. And those small businesses, and I don't even mean necessarily, businesses with equities, but restaurants, right? The bulk of the economy is very small businesses. Those are the businesses that we really saw the pullback in hiring first. And that, happened in 2022, 2023. Those will be more rate sensitive businesses, people borrowing at banks. And maybe that was a good evidence that, some of this pullback in labor demand is again, not AI, but maybe a function of rates being restrictive.
All right. Well, Veronica, we're not going to make you come back in next Wednesday, but we are looking forward to sharing a jobs report with you very soon. That is Veronica Clark of Citi. Now, to other top stories trending on the terminal this morning. A Brevin Howard fund manager has quietly become one of the world's most successful macro hedge fund managers. Singapore-based Minal Batwal has had an 18-year winning streak, not having a single down year since he started managing money during the 2008 financial crisis. His fund has scored wins on everything from Korean interest rates to Asian currencies. Stellantis shares plunging after it said a business reset resulted in charges of around $26 billion for the second half of 2025. CEO Antonio Filosa said that the charges largely reflect the cost of overestimating the pace of the energy transition. And work on a $16 billion Hudson River Rail tunnel is expected to come to a halt today following the Trump administration's decision to freeze its funding. The commission in charge of the project has sued the federal government in an effort to unlock more than $205 million. The tunnel construction is one of the most ambitious infrastructure projects in the United States. Coming up, Oman reporting indirect talks with the US and Iran. Latest on those negotiations. That's next. This is Bloomberg.
The president has obviously been quite clear in his demands of the Iranian regime. Zero nuclear capability is something he's been very explicit about, and he wants to see if a deal can be struck. And while these negotiations are taking place, I would remind the Iranian regime that the president has many options at his disposal, aside from diplomacy, as the commander-in-chief of the most powerful military.
In the Middle East, Washington and Tehran have held indirect talks to de-escalate tensions. Oman's foreign ministry writing in a statement, quote, "The consultations focused on creating the appropriate conditions for the resumption of diplomatic and technical negotiations." Joining us now is Bloomberg's Kasia Klimashinska. So it's a start, Kasia. Apparently the US delegation has already left. It's a start, but did we expect more?
It's a surprise. As you said, those are indirect talks. So Oman met with the U.S. delegation led by Steve Witkoff, and then separately with representatives from Iran. But Iran also said before those talks even started that it won't be a major step, that those will be just some sort of broad talks, and on the top of it, indirect. We haven't heard from President Trump about those negotiations yet, so this could still come later today. He just started posting, and of course, oil traders will follow it very carefully because this has been moving oil prices.
Yeah, and there wasn't even agreement before today on exactly what would be on the agenda. So I suppose this is something at least. Now, domestically, President Trump launched randomly a new website to help Americans apparently directly buy select medicines at a discount. Take a listen to this, Kasia.
We're taking the lowest price paid for drugs. We will pay equal to whatever the lowest price anywhere in the world. That's the price that you're going to be paying. It's a tremendous reduction. Drug prices in other nations will go up by doing this. They had to agree, and the reason they agreed is they used tariffs.
So it's a government website. You don't actually buy anything directly from that site. It's like an aggregator. It sort of sends you to whatever site the medication seems to be cheapest on, potentially. But many of these medications, if you have insurance, are already covered, right, Kasia? So what are researchers saying?
Yeah, so this is this push from President Trump to skip the insurers to let Americans buy some medicines with their own cash, especially the medicines that are aimed to reduce obesity. So that's what you can go in there and search for. And this is this concern to increase affordability, especially of healthcare.
Yeah, you would have to wonder if it isn't going to kick people off exchanges if they suddenly think that they don't need to be insured anymore. We'll see how it pans out. What about ICE and DHS? Apparently now the White House is looking for talks with Democrats over limiting ICE.
So this is one of the objectives for the Democrats. They really want those ICE officers out of the streets, or if they are there, they should be less aggressive. They should not wear face masks. They should have body cameras. They basically want to establish some sort of rules to de-escalate the tensions in major U.S. cities between ICE and immigrants as well as Americans. So Democrats have listed their demands. They sent the list of demands to Republicans and to the White House. And so there have to be talks between the two sides, or otherwise the funding for the Department of Homeland Security will expire.
Yeah, I think it's up on the 13th, right, which is only 7-8 days away. Kasia, we have to leave it there, but thank you so much. That is Bloomberg's Kasia Klimaszinska. Well, what a week it's been in tech. The biggest companies in the space out with massive spending plans, totaling as much as $650 billion this year as the AI race seemingly intensifies. Joining us now is Mandeep Singh of Bloomberg Intelligence. So, Mandeep, just in broad strokes, we saw spending plans go up. We saw the likes of software companies sell off. Is the market, are investors getting this right? Are they interpreting everything correctly?
I don't think so. Right now, we are in that fear mode where everyone seems to be panicking about the level of capex from the hyperscalers, and also, the pace at which the disruption will come. So clearly, the LLM companies, whether it's OpenAI, Anthropic, have increased their pace of product launches. But in terms of the impact, it's too early to say, they'll be displacing any existing software. And from that perspective, when you look at these capex numbers, they're obviously 30% above consensus in a lot of cases. That makes you wonder, what is the impact down the line in terms of, what it means in 2027 and 2028? And who is going to be using all this chip capacity? And how do we even make all those chips to begin with? So I think there is a big impact in terms of what this means for wafer production and who are the users going to be in terms of the chip capacity. And I think there are a lot of questions that need to be answered here.
Yeah, are we going to have a chip capacity mountain out there? Let's have a listen to Andy Jassy, because Amazon also announced plans to spend $200 billion this year in AI. And he spoke on the earnings call. He made it sound very palatable even. Take a listen.
when I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI. But the lion's share of that demand is still yet to come in the middle of that barbell, and that will come over time.
Yeah, I mean, he seemed to act like it was a necessary amount of spending. He seemed to say that it was an extraordinary opportunity to change the size of AWS and Amazon as a whole. How would that happen, Mandeep? Walk us through that process.
I mean, a lot of the CapEx investments that are going this year are for future capacity. So it's not as if they are deploying, the dollars for 2026. That capacity will come online, especially for someone like NVIDIA or TSMC. I mean, TSMC really has to ramp up their fab capacity here to deliver for Amazon, for NVIDIA, for Google. And if all these companies have had such a big step up in CapEx, I mean, the wafer capacity is not growing, 100%. And so from that perspective, there will be lags in terms of when they will finally get the chips. So from that, I just feel like right now, everyone is going all in because they want to put pressure on the frontier labs, your OpenAI, Anthropic, in terms of what these companies can do. Remember, they have to rely on the hyperscalers. And Google obviously has that vertical integration. So they have shown the advantage they have in terms of CapEx efficiency and using it within their own ecosystem. But for others, it is about renting those GPUs or, the accelerator chips down the line. And it'll be interesting to see what sort of demand they'll have.
Mandeep, it feels almost like a trial, right? We've heard from the mega techs and it's created this narrative in the market. But we haven't heard from the AppLovins and the Atlassians. They're all to come. I mean, AppLovin is reporting next week and it's the worst performer on the NASDAQ 100 year to date. It's down shockingly. So is Atlassian and lots of other companies. Will the narrative shift once their CEOs come out and say, look, this is overblown, this is what we're doing, it's all good for everybody?
I don't think so. And see, that's the thing about this panic is everyone sort of is in that phase where there is a lot of uncertainty. And even if the management team comes out and says, we have had a great quarter, this is going to linger on for a while because people really want to see how this plays out over the next 6 months, as opposed to, making any judgments based on what the companies are reporting this quarter.
Wow. Well, it feels like there have been some judgments made already. Mandeep, thank you so much. Mandeep Singh of Bloomberg Intelligence. Coming up, no jobs report, but we still get data and Fed speak in your day ahead next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Biogen and Carlyle wrapping up the week in earnings, and boy, what a week it was. Then we do get University of Michigan sentiment data out at 10 a.m. Eastern, and Fed Vice Chair Philip Jefferson is set to speak at 12 p.m. Eastern. Let's take a look at some pre-market movers. Amazon planning to spend, obviously, as you know by now, $200 billion on AI capex this year. And it is lower by about 7 to 8% on the session this morning. Stellantis down 23%. It took charges tied to the EV pullback. It said it didn't think the energy transition was going to take as long. It's also dealing with tariffs, and it's something that we're seeing across the board for EV makers. And strategy rebounding just a little bit. Bitcoin rebounded after a 50% dip from its peak. But let's take a look at Bitcoin, because if you look at the macro environment, you can see it's still below $66,000. Now, it reached as low as 60 and change, so that's something. We are seeing futures pointing higher. Maybe it's going to be a risk on Friday. We'll see. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.